is the Tesla stock rally officially over, or will the party go on? Now, there's a couple of things I want to highlight. Now, the main concern is earnings. And yes, we already talked about the earnings for Tesla. We talked about how Tesla has exceptionally well pricing power that will help the company. But we also talked about earnings for a lot of the other companies. And this definitely influences the price of Tesla. And I want to go ahead and break down what are some things that we should definitely keep an eye out for. Now, as Tesla stock was rising up, we were entering into the biggest earnings week for the S&P 500 for Q4 of 2022. And so we already know that Tesla did well for its earnings. We had the FOMC rate decision where the Federal Reserve hiked by 25 basis points, which by the overall market was seen as optimistic, and I already explained the reason why. However, the last catalyst event for the week was how were the mega cap companies going to perform with their earnings. And what we ended up seeing was either weak earnings or weak guidance. Now, why does this matter? Well, this could honestly knock out all the hopium that was in the market and switch the direction back down. Oh my gosh, the market goes up and it goes down. Now here's the thing, guys. Although Tesla stock from a fundamental standpoint, right, is looking to do very well, and I am bullish on Tesla in the long term, we have to understand that if the overall market's coming down because other companies are coming down, well, guess what? That's also going to reflect on Tesla. Investors are going to be pouring their money out and then reverting back into risk-free assets like bonds. With that being said, I also want to point out to some other data points that we definitely want to take a look into if we want to see what is the most probable direction for the overall market. So let's go ahead and hop into my laptop because you don't want to miss this. Alrighty, so we're officially on my laptop. Now, first off, I want to highlight some of the technicals, but I also want to dive deep into, the macroeconomic climate and also highlight some of the fundamentals, right? Because oftentimes they say you want to look at several different data points, right? You want to see the larger picture. You don't want to just rely on, what the charts say or what is this. You want to look at as much data as you possibly can. So one of the first things I want to highlight, like I said, is just, the charts, right? So first off, we see that Tesla has been running up. We've had some pullbacks. We had a pullback over here. We ran up. We had a little pullback over here. And then we actually broke this area of resistance, made new highs, and then we broke down, right? New highs for 2022, by the way. And now we're breaking down. So one of the main things we want to see is Tesla going to hold up around this level at around $184 per share, right? So also something I want to point out is that although the fundamentals for Tesla can be great, also what happens in the overall market can impact Tesla, right? Because if we look at, let's say, the QQQ, which is a NASDAQ index ETF, we can see just like Tesla, it rallied up for the beginning of the day, but towards the end of the day, we actually came down, right? And then we see very similar patterns with Tesla, right? Now, does this mean that, Tesla's always going to trade 100% in correspondence with the NASDAQ ETF QQQ? No, absolutely not, right? Because each stock is its individual company. It has, different data sets that are going to move it up and down, right? Of course. But we also have to acknowledge that if the overall market is pulling down, well, that's most likely also going to pull down, stocks like Tesla, right? We're going to have a lot of fear in the market, right? So why are we having fear in the market? Why is the market kind of pulling back, right? Well, I want to look into some of the fundamentals, right? So first off, based off this Wall Street Journal article over here, I just want to show you guys that Apple actually didn't have good earnings, right? We see that Apple shares fell about 3% in post-market trading after the tech behemoth announced its first quarterly revenue decline in nearly 4 years, right? Now, of course, I'm not going to go and break down everything for Apple, but, they just had disruptions in the supply chain due to a few things happening in China, which definitely hurt, the overall company. Okay, well, things are not looking good for Apple, whatever. Let's take a look at another, mega cap. We're going to look at Google, Alphabet, right? Now, Google, what they mentioned is that they're seeing like a drop in ad revenue, right? Which is a large portion of their business, by the way, as companies are not marketing as they were during, the bull market in the pandemic, right? When there was a flush of money coming in. They're not advertising as they were often. So this is hurting Google, right? And they also gave kind of bad guidance, right? Lastly, we have Amazon, right? Now, I want to go ahead and highlight this because Amazon beat on fourth quarter quarter earnings, right? So you might be thinking, well, this is good, right? Amazon reported fourth quarter sales on Thursday that beat analysts' expectations or estimates, right? Well, one of the things I mentioned in the recent video is that, expectations or estimates from the analysts have been severely lowered in anticipation that, things were not going to be good. So actually beating, the overall, expectations, the estimates is not so much of a high bar, right? It's not a high bar to go over, right? So things have already been revised down, right? So that's one thing. And then they also provided light guidance going forward. So even if they did beat, the lowered estimates, well, they're providing guidance that is not looking good going forward. So, as far as what's going on, we're having large companies mention, hey, things may not be good or things are not good, right? And obviously that's going to install some fear and pain in the market. Okay, well, that's one thing. We looked at some of the technicals, we looked at some of the fundamentals, but we also want to take a look into the macroeconomic climate. Now, we had the initial jobs claims come out today, which showed that, for January, there was a decrease of job claims, right, by 3,000. Right? And some individuals may say, well, this is good, right? Because if there's less people making jobless claims, well, that means that unemployment is going to go down, right? And that's good for the economy. However, that's actually bad in the sense that Jerome Powell and the Federal Reserve, they want to kind of, stifle the growth of the economy in order to calm down inflation, right? And we talked about how in a recent video, inflation is coming down, but that's not the entirety of the story, right? Because in fact, service inflation is actually going up. Not a lot of people know about this. Service inflation is going up. And why is this important? Well, guess what? Service inflation accounts for 57% of the CPI report. So even though Jerome Powell has mentioned, well, we're seeing, prices for products come down in some areas, well, that's good because obviously, that helps bring down inflation. But a major issue with inflation is service inflation being so high. And of course, the areas that Jerome Powell and the Federal Reserve is seeing of inflation coming down is pretty much due to supply chain bottlenecks that happened during COVID. So it's expected for that to go down. But for service inflation to go down, that's the sticky area. So there was a lot of optimism in the market. And of course, the market could still be going up, right? Because at the end of the day, no one has a definitive answer. If anyone tells you that, you better run, right? But it's okay to have convictions. And I do think that the market is going to have a correction coming soon, especially when we look at some of the data points, right? Now, again, just highlighting some things with service inflation. For those of you guys that may not know, what, makes service inflation go up, right? What makes it go up? So I want to just show you guys this. So more jobs and higher wages increase household income, and this leads to a rise in consumer spending, further increasing aggregate demand for the scope for firms to increase the price of their goods and services. When this happens across a large number of businesses and sectors, this leads to an increase in inflation. Going back to, the jobless claims. Yeah, obviously a robust job market is good. But in this situation, we kind of need to trim off the fat and have unemployment rise a bit so we could cool off inflation. Otherwise, if inflation continues going up or staying sticky, well, the Fed has no choice but to continue raising the federal fund rate, which of course that stifles growth, right? Because now money is more expensive to borrow, right? This is something I've said a multitude of different times, right? So that's why we really want to pay attention to what happens next, right? Now, going on to the flow data, right? I don't really talk about this on YouTube. I really talk about this with the Push and Profit private group, but we're seeing, a lot of large premiums, large institutions being a little bit more bearish with Tesla. Of course, we have some, bullish option trades, but we're seeing a flow of a lot of bearish trades. Now, if you guys want to learn more about, option flow, I will have a video on that coming soon. And I already have a video on that in the Push and Profit private group explaining this in depth. But basically what we're seeing is large money, big money, oftentimes considered smart money, is betting in the short term for Tesla to go down. Right now, I just want to go ahead and go back to Tesla and go to a weekly time frame. So yeah, we've had a massive run up, but I don't think the market's just gonna run up and then just continue going up. That just never happens, right? In fact, what I see happening is, like I said, a little bit of a correction. We had a massive rally, but I believe now we're going to start to correct as the hopeism is going to kind of die off a little bit, and we're going to see prices just contract, right? We're going to see money come out of the market. We're going to see more selling taking place. So definitely something we want to pay attention to, especially this price level for Tesla. This, we want to pay attention to the price action. Now, if you guys want to learn a little bit more of what I look into when it comes to trading and investing in the overall market, then make sure to check out the first link in the description below, because it's going to be a link to the Push and Profit program, where it's basically a program where I go over what I look into when it comes to trading and investing. Also, you get to have access to the private group where I talk about every single day what stocks I'm looking to trade and the reason why. And also, there is a coupon code. Simply just type in VDAY and you actually get 80% off. This does expire pretty soon, so definitely take advantage of this coupon code. It's probably the biggest coupon code we'll have for this year. After that, prices go back to regular numbers, and in fact, prices might actually go up later in the year. So definitely take advantage of this. And with that being said, guys, hope you guys like this video, and I'll see you guys on this next video right over here. Take care, guys.